from Raja Option Trading. Today we will talk about one of my favorite option trading strategies. It's called back ratio spread. So today we will talk about a ratio spread, basically a call back ratio option spread. So with that, let's quickly jump in. So why do we do call ratio back spread? So think about stocks like Tesla, AMD, or even DOCU. These are all high-flying stocks, and you feel like you don't want to pay so much, but at the meantime you don't want to miss out on the exponential growth of the stock. So in this scenario, you are really bullish. You think stock is going to go up. Think Tesla, think DocuSign. So you will typically buy and sell. So in this case, you'll buy two call options and you'll sell one call option. In the nutshell, you are a net buyer of stock options or call options in this scenario. So with this uncapped profit for potential, as stocks explores higher, you'll make more money. Uncapped profit potential, and also your cost of doing the deal is really very, very low, considerably low, and you might even do it for a credit. And max profit potential is unlimited, like we talked about, and max loss is really if you pay a premium, that's what you lose. And when do we do ratio call back spread? Your outlook is aggressively bullish, think Tesla, and you're looking for increasing volatility, with a lot of political events happening around the world, and even COVID situation, volatility is really, increasing for most part. And duration, because you're a net buyer of call options here, you want to give yourself enough time. So typically 3 months or even more. And strike price perspective, you typically sell, one in the money call option, so you'll get some credit for that. And you'll buy two out of money call options. So that's the strategy. Basically, you're a net buyer. Ratio can be different. Here we are talking about by selling one, buying two. You could double, or you could go with a similar ratio. So with this, let's quickly step into Thinkorswim platform and look at one example. So I'm in Thinkorswim platform here. It's November 16th, as you can see here. It's about 11 o'clock. So let's look at one of my favorite stock, in this case Tesla, and let's look at the chart of Tesla. If you look at the chart here, Tesla, as you can see, very bullish, I would say. It's above the 100-day moving average. We're doing pretty well, and volatility is okay. It's right now it's not too high, but it can only go up, as you can see here. And stock, if you look at the on the balance volume, it's going up. Chocolate money flow, just try to increase a little bit as you speak. So you would think generally you're bullish about this stock. So what we'll do is we'll go and initiate a call ratio spread, or call ratio back spread as you call it. Stock price is at 409. So we would go around 400 and initiate the position. Let me quickly go to the 400 strike here. So right here, so I also did one in case Thinkorswim fails. I have one here. Let's duplicate this. So we have 400, and 410. I think that's a good spread to go with. So let's initiate a ratio call back spread. Right here, back ratio. So if you look at here, we got 400. We are selling a call option at 400, and we'll increase this strike to 410. And we are buying two call options at 410. So the net debit is 56.63, as you can see here. And also, like we talked about, we went out to 19th March, more than 3 months out, just to give us enough time. And we'll go ahead and initiate this position here, send it, we got it. So that's our Tesla. Next, for the next stock, let's go to one more bullish stock, which is DocuSign. DOCU is a symbol. There we go. Let it give a minute for buffering. In the meantime, let's look at the chart of DocuSign. So as you see here, DocuSign is another bullish stock. It's generally going high, and volatility is kind of sort of a little bit creeping up as we speak. And Chocolate money flow, as you can see here, it's also going up. And on the balance is really, it came down a little bit here, but slowly flat to, going up right now. With that, let's look at DocuSign. Stock is trading at 207. We'll go around 200 strike price, which is, we'll go not too far out. 123 days out is good. So we'll go somewhere around 200. Let's give it a minute to buffer. In the meantime, let's look at the chart. Okay, we are back to buffering, so we're good. So let's go to 195 and actually 200, 210. We'll initiate a ratio call back spread. So with that, let me go here, buy a back ratio. As you can see here, 200, 210. I'm paying around $22.43. That's how much we can maximum lose. As you can see here, our profit is potentially infinite. Money we can lose is what we paid. And let's go initiate this. Done. And for the last one, let's go to AMD, which is one of my favorite when it comes to data center and computer chips. They're really giving Intel very tough competition and taking the market share. With that, let's look at AMD stock chart here. As you can see here, AMD is doing very well, and their stock is really going up. They even surpassed $100 billion market cap, which is a good story. With that, let's look at this here. 123 days out is good enough. If you look here, we got stock is at 83. I think it's good to initiate 75 and 85 ratio call back spread. As you can see, I already initiated one just to make sure the Thinkorswim platform on demand will not give up on us. As soon as buffering is done, we can go and initiate. Let's give it a minute. Go back to chart here. Chart, it's it's doing very well, as you can see here. Looks like we're done buffering. Let's go back here. So initiate position right here. Let me go here, buy back ratio. As you can see here, it's $11.10. Let me do one thing. 75 is good from a selling a call position, but buying, let's go to 85. So let's give us good room here, so that way we can pay less money for what we buy. There you go. So this is $3.63, 75, 85 spread. As you can see, we are not paying too much. So let's go initiate. And okay, it might take a while. Let's see what's going on here. Still working. 363, 367. So let's increase it to maybe 370 just to get the fill. Okay, we got the fill. Okay, that's good. All right, so you get the idea. So what we really do is really buy in the money, sell in the money call, and buy, in this case, 2 out of the money call. Our outlook is positive. We are thinking stock is going to do very well. So with that, let's go back to on demand. Let's go to December to see, actually January, to see how is our ratio back spread doing. With that, let's go back here. Give it a minute for buffering. In the meantime, let's look at the chart. Maybe AMD is a good one. So if you look at AMD, right now we are in January. As you can see here, Jan 7. Stock, I think it's done okay. It's we bought back in November. So somewhere here, November 16th. So stock, I think it's gone up, not exponentially, but it's done okay, I guess. If you look at other examples, as we got Tesla also. If you look at Tesla, we got around November, somewhere here. This has done considerably well, shot up exponentially. So we should have a good profit for this one. And last but not least is DocuSign. And if you look at DocuSign here, we bought somewhere in November 16th. I think stock kind of went sideways, I would say, not not very exponential growth, but I think that should be. Let's see how we did. For that, let's go back to here, to our monitor tab. Still buffering. Let's look at AMD here. As you can see here, AMD we made we made around $12. Reason is AMD did not go up exponentially. Actually, okay, now we are back. So we made 662, which is I think it's good enough for these two ratio back spreads. And let's look at DocuSign. DocuSign, I think we did total we did 1,769, very good. And Tesla, the last stock, we did considerably well. We did 65K. We have two back ratio spreads. Hardly maybe a month or two, maybe 2 to 3 months, we did very well. So with that, I hope you get a good idea. Let's go ahead and close these positions out and take the profit. As you can see here, just do it at the market price. Since we got more days, we could even let it run, because as you know, earnings season is coming. I'm sure stocks like AMD and DocuSign, they can really do very well because of this environment. All right, so we got one more to go. DocuSign, close that too. All right, so next is our Tesla position here. Two back ratio spreads, did very well. One more to go. All right, so what did we learn here? What we learned is really, when a stock is growing exponentially, accelerating upward, and volatility is also increasing, and you don't want to miss out. So in that scenario, you could do a ratio, call ratio back spread. So that way you are selling a in the money call option and buying two out of the money call option. The ratio can vary. It's a very good position for expensive stocks like Tesla as an example, or even DocuSign. It's a very good strategy. Typically, just before the earning, the volatility is typically low, so you would go month or so before earning and initiate the position. And if you don't want to sit through the earnings, wait through the earning, you can really sell the position just the day of earning, or maybe a day or two before earning. The exponential increase in the volatility will help you to make money. So it's a very good strategy if you're bullish and if you think stock will really shoot up higher. With that, thank you very much. Happy trading.